Good morning, dear viewers. My name is Clive Thompson, and here's your morning stock market, investment and financial news report for Thursday, August 7th. This is the first time I'm doing it, so if you'd like me to do it again and you want me to do it regularly, please hit the subscribe button so I know that you want to hear it. Last night, the US stock market's resilience continued to impress. Good news and the market goes up, bad news and the market goes up, hardly any news and the market goes up. The market seems like it's going up all the time. It's like there's a wall of money trying to get into stocks. As an example, 2 weeks ago, Tesla reported very disappointing results. Revenue declined for the second quarter in a row, showing a year-on-year decline. Operating income has been falling for 2 years. In 2022, it's $13.7 billion. It was $8.9 billion in 2023, down a lot, and $7.1 billion, down again in 2024. For the first half of 2025, the operating income was only $1.4 billion, indicating it's another sharp drop, and it's indicating a very sharp drop for this year as well. So the company is on track for another year of falling operating income, and it will soon be hit by the elimination of the $7,500 federal electric vehicle tax credit, which will pressure sales from October onwards. Then, a few days ago, we had the legal judgment where Tesla was awarded to pay $329 million in an autopilot crash. This judgment opens the door for further potential cases. And then there's the news today that China sales are falling of Tesla cars. And of course, we had the news a couple of days ago that Elon Musk has been awarded a stock-based compensation payment of $30 billion, effectively diluting the shareholders by 3%. The payment is contingent on him staying another 2 years at the company. Obviously, apparently, let's say, the board of directors think that his presence is absolutely essential for the future of the company. Yet despite all these bits of bad news, the stock price, which was trading at $280 after the earnings report, has risen and kept rising, and it's closed last night at $319.91. To put that in perspective, it means that Tesla is being valued at 184 times the last 12 months' earnings. Yep, you heard that right. It's got a price-earnings ratio of 184. And if the analysts are correct with their forecast earnings for 2026, we're not going to hear about that for another year and a half or 2 years, the company will be, based on their earnings projections, be on a price-earnings ratio of 116 times. That's steep by anybody's standards. But the market doesn't care about these silly things like fundamentals. You may think it's going to crash, but don't bet on it. As Marty Zweig, the financial analyst, once said, don't fight the tape. John Maynard Keynes put it another way. He said, the market can stay irrational longer than you can stay solvent. The mother of all warnings came from the former chairman of the Federal Reserve, Mr. Alan Greenspan, in 1996, when he used the words irrational exuberance to describe the frothy conditions of the dot-com bubble. That was 1996, yet despite his warning, Nasdaq stocks continued rising for over 3 years, gaining another 295%, until the bubble finally burst in March 2000. Don't fight the tape, folks. So stocks soared again last night, with all the major indices up for the third consecutive session. The S&P 500 was up 0.73, the Nasdaq 100 was up 1.21%. And according to the futures, stocks are set to open higher again today. So stock markets are ignoring all the bad news. They're ignoring the awful labour statistic, the rising inflation, the tariffs. But good news drives stocks rapidly higher. An example was the announcement by Apple last night that they will invest $100 billion in American manufacturing over the next 4 years. The significance of this announcement is that it shows that the tariffs might be starting to work and bringing manufacturing home. So it's not just Apple, it's the signal that Apple is sending that drove markets higher. And Apple did very well last night. The shares rose about 4%. Now, I know that some of you skeptics will be saying, those are just words. They're not legally binding. Or maybe you're saying that Apple were advised to say that. Advised by who, I wonder? All I can say is, good move, Apple. Trump now loves you. Yeah, and Apple shares, I think they're up over 5% on that news. Well, the other thing which thrilled the market, or continues to thrill the market, was the awful jobs report. Well, you may be asking, why does bad news thrill the market? Well, firstly, it has substantially increased the probability of a September rate cut. The probability of rate cut, which before Chairman, or immediately after Chairman Powell spoke last week, was around 48%, has risen very, very rapidly to now a 95% probability of a rate cut in the September meeting. And rate cuts, lower interest rates, generally make stocks, particularly those with a little or no yield, seem relatively more attractive. Secondly, if US businesses are cutting jobs, it means they're cutting expenses, which could be good for profits. So that's a demonstration of how Wall Street can turn the bad news into good news if it wants to. Anyway, the pressure now, or the feeling now on Wall Street, is that the Fed will buckle to political pressure to lower rates. Last week we had two Federal Reserve governors dissenting on the FOMC decision to leave rates unchanged. That hasn't happened in 30 years, and both of them went public giving their reasons for dissenting. And then a member of the Federal Reserve Board, Adriana Kugler, resigned 5 months before her term was up. She gave a lame excuse about wanting to return to academia. Trump characterized her resignation as a pleasant surprise, and he promised to make an announcement about a replacement very shortly. So this now opens the possibility for him to position his preferred successor to Chairman Jerome Powell inside the Fed well before Powell's term expires in May 2026. This would potentially create more disruption inside the Fed and keep up the pressure to lower interest rates, something that Mr. Trump has been demanding. Last night, Disney announced its earnings. It beat expectations on all fronts, but for some reason, a weird reason, I guess, the stock declined 2.6%. But there was a bit of bad news on the technology front. An AI company called Supermicro saw their shares crash 18.3% on disappointing earnings, and that's despite the AI boom. That's in complete contrast to Palantir's amazing earnings beat last week, or it was earlier this week, wasn't it? So while Supermicro shares went down 18.3% last night, Palantir's shares rose another 3.5%. So what's this showing? It's showing that it isn't just enough to be in the AI market. You have to also demonstrate that you've got technological differentiation and you're actually turning that into growing sales. as Palantir have shown. I mean, Palantir have raised their earnings expectation for the current year. We talked a little bit earlier about Tesla, but another electric vehicle manufacturer likely to suffer from the withdrawal of the 7,500 electric vehicle tax credit is Rivian Automotive. Last night, Rivian widened their current year loss projection. They were going to make a loss. It's now going to be bigger, citing the loss of the tax credit and the increasing import duties. So Rivian Automotive shares fell 4.2% last night. Around the world, stock markets are rising. The Asian stock markets are up this morning. What's coming up? Well, 21st to 23rd of August, we have the Jackson Hole Symposium, or more precisely, the Jackson Hole Economic Policy Symposium. It will be a critical event for Federal Reserve communications. It will be the first communication after Jerome Powell announced last week that the labour market remained solid and is broadly in balance. And then just 2 days later, we saw the previous job numbers being revised down by over 250,000. It's doubtful that the Fed will explain why they were so out of touch with the economic reality, but we can probably expect some words which will give us more confirmation about the probability of a rate cut on the 27th of September? It's mid-September, I think. When's the CME meeting? The CME meeting is on 17th of September, not 27th of September. Probability I see now on the CME website is 93.4% probability of a rate cut. So this morning, the futures markets are showing strong performances from all the major stock indices around the world. So everything should open up higher than yesterday. The VIX index, which is a measure of volatility, its price is based around the option premiums, was down. It's down to about 17.55, which indicates a high degree of complacency. In other words, people are not pricing in any large volatility or any large falls in the stock market. So one could say that there is very little fear at the moment. This morning, gold and silver are both doing very well. Spot gold is up $15.60 to $3,386. And spot silver is up 26 cents above $38 again. Both metals look like they're on their way to pass their recent high points. Platinum and palladium are also participating in this rally, the precious metal rally. The dollar slipped just a little overnight with the DXY, that's the dollar index, a basket of currencies against dollar. Dollar index slipped just below 98 to 97.91. Bitcoin this morning is trading at 114,739, still reflecting a very slight downward trend over the last week. Bond yields, the US bond yields are slightly higher, with the US 10-year yielding 4.24% this morning. It was 4.18 earlier in the night. In commodities, cocoa was the outstanding performer, up 4%, followed by platinum, palladium, cattle, and silver. Going down, we had lumber futures, which are reflecting housing expectations due to the increasing job uncertainty. So that's the financial markets update this morning. If you want me to do this regularly, can you click subscribe, and I'll see how much that goes up. If it goes up a lot, I'll certainly be doing more of these. Thank you very much. My name is Clive Thompson, and I'd like to wish everybody a great day, a great week, and speak to you perhaps tomorrow.